Welcome on board Ruchit Jain of 5paisa.com and understand that how he's looking at the market texture this time around and any stocks that he's picking at this point in time. Very good afternoon, Ruchit, and thank you so much for your time, especially on the Nifty as well as Bank Nifty. Tomorrow is going to be the Nifty 50 expiry. How are you seeing that 19,800? Are we going to build on further gains on these particular levels? And what's your take on Nifty Bank?
Yes, hi, very good afternoon. I think markets somewhat have digested that negative news at the start of the week quite nicely. We saw that the global markets did not react much negatively, and hence we had already seen a corrective phase before this news. Our markets had recently seen a correction from that high of 20,200 to 19,300, 400 range. So I think the most of the corrective part has been done. And now again, in the daily chart, there's a high top, high bottom formation, which confirms a continuation of the uptrend. So we are of the opinion that the downside seems to be over from here on. 19,600 to 500 is now where the support base has shifted for the markets. And on the higher side, 19,900 is the range level where initially we would see the markets heading higher. And once that is surpassed, then in the near term, we would, we would even clock new record highs again. So from a very short term perspective, the momentum seems to be quite positive, and that uptrend is likely to continue going ahead. The banking has not yet picked up, primarily because of, I think, PSU banks again witnessed some correction today. And even from the private sector heavyweight stocks such as ICICI and HDFC, have not been participating of late. So here we need a confirmation, from the banking index, to surpass above that 44,800 mark. So that is the initial resistance coming in. And once 44,800 gets crossed, then we would see a good participation from the bank nifty as well. So a buy and dip strategy should be kept in a nifty. If we get any kind of declines in tomorrow's trading session, 19,750, 19,700 is a good support range for intraday tomorrow. Go long in that range if we get any dip, and probable short-term targets should be seen around 19,900.
Buy on dip strategy coming in from Ruchit. Ruchit, this is Lisa on the other side. Good afternoon. Well, yes, Nifty and Nifty Bank, they were telling different stories altogether. But we had the cement stocks buzzing today, and what will be your and even the earnings season, yes, that is also around the corner. So in this scenario, what is the picks that you're looking out for?
Very good afternoon, Lisa. Yes, a lot of stock specific action would be seen now as we would see earnings, the numbers coming out. But cement is one space where quite a good strength has been seen today. You look at the price action volume in many of the cement stocks were quite high today, and even in derivative segment we have seen good long formations in some of the names such as Grasim is there, Ambuja is there, Ultratech is there. So I think this for rest of the series, the cement stocks could do well and show some relative outperformance in the market. So one of the pick is from the cement itself, which is Ambuja Cement. So there's a technical breakout as well from a falling trendline resistance over here today. And even in the option segment, if we see, then a lot of call writers have started unwinding their positions, which is usually a bullish sign. So one can buy Ambuja Cement for short term with stop loss below 434, expecting target somewhere around 460. And from the mid-cap space, Welspun India is one stock where chart structures are quite good. The price up moves have been supported by good volume. The recent corrections did not see any kind of significant higher volume sell-off. And again, today we witnessed a good volume price up move. So these are all signs of a typical uptrend which is going on in the stock. So from a short-term perspective, and one can go long here as well with stop below 118 for potential targets around 134 to 135.
Thank you so much for joining us today on ET Now. With this, we'll let you go on that.